Hey there traders, welcome to Trust Whale, the place where we decode charts like no one else. Stick around till the end, grab your notepad, and hit that subscribe button so you never miss a bit on Bitcoin's next big move. Now, our first part, crypto market, high volatility and high reward. The crypto market is well known for its wild price swings, making it a thrilling yet risky environment for traders and investors. For instance, let's look at Bitcoin. In a single day, its price can jump or drop by several percentage points. This volatility can be demonstrated using a Marbuzo candle, where Bitcoin might move 2% within just a 5-minute time frame, while gold XIU may only shift by 0.5% in the same period. This comparison highlights how crypto moves at a larger scale. Such rapid price changes create opportunities for traders to make substantial profits in a short period. But the same swings also pose significant risks, potentially leading to heavy losses. One example of this high volatility is the rapid price surge of Bitcoin in late 2020, where it nearly tripled in value within a few months, only to drop by over 50% in early 2021. Those who entered and exited the market at right times reaped huge rewards, but those who failed to manage their risk suffered substantial losses. The key takeaway is that the crypto market is advantageous for those who understand and can manage its volatility. For long-term investors, spot trading or holding assets can also be highly profitable, as Bitcoin's value tends to rise over time, particularly around significant events like the halving. By holding assets, traders can avoid the short-term noise and focus on the bigger picture of long-term growth. You can see halving movement and the way you can react to it in the previous video on my channel. Make sure you check it and make better decisions. Now, let's move on to Forex market, stability and risk management. Compared to crypto, the Forex market is more stable and structured, offering a volatile environment but on a logical scale. Forex pairs typically experience smaller price movements, making the market more predictable and easier to manage for traders focused on steady and consistent profits. This is where concepts like lot and pip come into play. A lot represents the size of a trade in the Forex market. For example, a standard lot is 100,000 units of the base currency. Pip, or percentage in point, is the smallest price movement a currency pair can make, typically the fourth decimal place in most Forex pairs. But what are these exactly? Understanding lot and pip is crucial in Forex trading. For example, if a trader buys a standard lot of Euro USD, each pip movement equals $10 in profit or loss. If the Euro USD moves 50 pips in the trader's favor, they would make $500, but if it moves against them, they could lose the same amount. This structured approach to calculating risk and reward is different from crypto trading, where price movements are often expressed in percentages due to the lack of uniform pip-like units. Now, let's discuss about impact of news on both markets. News events significantly impact both the crypto and Forex markets, but the way these markets react can differ. In the Forex market, economic indicators like the Consumer Price Index (CPI) play a key role in determining currency values. The CPI measures the average change over time in the prices paid by consumers for goods and services, and it's a major indicator of inflation. If the CPI comes in higher than expected, it often signals inflation, leading to speculation that central banks will raise interest rates to control it. This, in turn, strengthens the currency because higher interest rates attract foreign investments. For example, if the US CPI is released showing a significant increase, traders might expect the Federal Reserve to raise interest rates. This would cause the US dollar to appreciate against other currencies. Forex traders would position themselves accordingly, buying the USD and selling weaker currencies. This type of news-driven trading requires a strong understanding of macroeconomic factors and how they influence currency values. Though in crypto market, news can have an even more dramatic and immediate impact. Regulatory changes, security breaches, or even social media posts from influential figures can lead to extreme price volatility. For example, when China announced a crackdown on cryptocurrency mining in 2021, Bitcoin's price dropped sharply within hours. Understanding how to interpret and react to news is critical in both markets, but the reaction time and volatility are generally much higher in crypto. At last, the most important part, risk management. No matter which market you trade in, proper risk management is essential for long-term success. Both Forex and crypto offer significant rewards, but the risks can be just as high if not managed carefully. In Forex, traders can control their risk through lot sizes, stop loss orders, and by focusing on pairs with lower volatility. For example, trading a major currency pair like Euro USD, which tends to be more stable, can provide a more predictable trading environment. However, in crypto, risk management is equally important but can be more challenging due to the market's volatility. Traders need to be disciplined with stop losses, limit orders, and diversification. For instance, holding a mix of stable coins like Bitcoin and Ethereum alongside smaller altcoins can help mitigate risk. The potential for large profits in crypto might tempt traders to take excessive risks, but the key to long-term success is in balancing that risk with smart, calculated decisions. For example, each week you open 10 positions on one currency with 3 to 1 RR and a stable win rate of 50%. For 5 wins, you have 15 points profit and 5 losses. Now imagine how it will work in long term with the most logical measures for beginners. Ultimately, whether you trade in the Forex market with its structured lot and pip system or in the high risk, high reward world of crypto, understanding risk management and its ratios are crucial to avoid catastrophic losses and increase your chances of success. Now we are all done. Don't forget to subscribe, comment, and hit notification bell to see upcoming videos as soon as they publish. Thank you all for watching my video, and goodbye till the next video.